Hey guys, Frank Curzio here with another live video. I'm calling this Disney news could crash the markets. So the markets come down hard today. The top story was Disney talking about how workers were petitioning to delay the reopening, right, of these parks, especially on the East Coast. And you can look at this so many different ways, right? You can look at it as Disney saying the employees are getting paid $600 in checks. The furloughed employees, which is around 40,000, I think it went up to 100,000. I think it's about 40,000. Disney promised to pay the benefits for a year. You can say these employees are extending as far as you can because we look coronavirus cases and the testing and the measures and stuff like that. We're testing more than ever, so of course you're going to see higher cases. We're seeing that in Florida, where I live, in Texas. A good example of this, guys, is a month ago I didn't know anyone who got tested. Now I know at least 50 people that got tested. So the more tests, the more chance of you contracting the disease. Any way you want to look at it, that's one way of looking at it. You got to look beyond the news, right? That's how you make money in stocks, because this Disney news is very scary. I'm going to explain why. Now, I'm going to share my chart with you here. If you look at Disney, this is 1 year. This is the forward PE is 279, right? Look at this chart, 279. That means that expectations for Disney are extremely optimistic. Not that things are going to return back to normal, that it's going to be the greatest conditions the United States has ever seen, and it's going to result in Disney's shares booming, which is kind of crazy when you think about it, right? So you can't have any setbacks trading at that valuation. Now, let me get back to this, right? So this is 1 year. This is 5 year. This is 10 year. Look at this, right? This is expectations have never been greater in the history of this company. Now, why is that such a big deal? Because now with this news, you're pushing back, right, these delays. Because what have we seen over the past couple of weeks? A big transition into the reopening of the economy. So we looked at hotels, we looked at airlines, we looked at casinos, cruise lines, right? Expectations are built in for perfection. These companies have not operated. And then now they open up, they're operating what, 10, 15% efficiency, which you want them to get to 40, 50, 60, 70. If there's a setback, or if we see more closings, right, or more delays, these markets are going to crash. You're looking at, and maybe technology companies hold up, but let me just show you. When you go back to this chart, this isn't just Disney. I mean, you can go to hotel chains. You can go, let's go Marriott. I'm going to just type in names here and show you why this is so important. This is Marriott. Look at the expectations. Look where the forward PE is, suggesting that these earnings better be extremely strong going forward. You can look at, let's go airlines next. Let's go American Airlines. Same thing here. I mean, look at that. Look where this number is, right? Expectations are high. Let's go to casinos. Las Vegas Sands. You're just throwing some of these names in here because they're all in the same class of stocks, guys. You need to understand this. The expectations have never been greater. That's why you have the greatest investors in the world saying this is the most dangerous market they've ever seen, is because of this, because expectations are perfect. That means no tensions with China, coronavirus, we're going to have a vaccine by the end of this year. All this is priced for absolute perfection, even better than that. And now we're seeing delays as the coronavirus spreads. Again, you could have your own conclusion of why that's happening, but if they delay the reopening, especially a company like Disney, which really valuation historically, it should be trading around $65. It's trading like at 110. Again, it's a different market. It could be $300 in a month from now. You know as well as I do, this market's crazy right now. But just understand the risks of the stocks that you're buying on the reopening of the economy. If it's delayed, if it takes longer, if there's just any hiccups like we're seeing now, you're going to see these markets crash again, which you're seeing. They've come tremendously down from that initial high. Be very, very careful, guys. Once again, I know I like to keep these things a little bit more shorter, but if you're looking at airlines, you're looking at casinos, you're looking at cruise lines, you're looking at hotels. If you own these in your portfolio, be very, very careful because they're priced for perfection. And you know what? If we do see some more lockdowns, these things are going to get nailed a lot harder. I'm Frank Curzio, and as always, I'll report back to you guys soon. Take care.